Okay, we are live. All right. Welcome, YouTube. Today is another episode of Money Talks by YouTube. Today, my guest is Kelly Korshak. We're welcoming back onto the show, and we're going to discuss the market updates since the second quarter of 2020. We're still in the very epicenter, at least I am anyway, because I'm in New York City. I'm in the epicenter of this global pandemic here. And we're going to discuss what's happening in the stock market as a result of that. A lot of surprises and a lot of crazy behavior both in the market, a lot of discrepancy, some divergence and stuff. We're going to talk about it all. So stay tuned. Welcome back to the show, Kelly.
Yeah, thanks for having me, Aaron. Good to be back.
Awesome. So quarter two apparently was the best second quarter since 1998. Now, I think that is taken a little bit out of context given the situation of the global economy. But what are your comments on something like that? When you hear, CNBC say stuff like that, what are your thoughts?
Obviously, there's a distortion going on in the market right now because of the COVID-19 pandemic that caused the market to go down so much in March, which is really the end of the first quarter, right? So the second quarter, after going down 33% from its peak, the S&P, by the middle of March, it was down 33%. It would be very difficult for the second quarter to be as bad as that was a 33% drop, literally within a matter of maybe 3 weeks when it really just hit the fan. But there is something noteworthy of that, of the 1998. I was a trader on Wall Street at that time, and that was the time in the summer of before the summer of 98, when long-term capital management failed. And it failed because of the Russian ruble disaster that was as a result of the oil problem. So the ruble collapsed. It threw out interest rate yields and spreads in 1998, and that caused the market to go down precipitously. And but just like in 1998, the aftermath of it was that the market realized that it was an overreaction to a Four Sigma event that was going to be short-lived in nature. That remains to be seen in what will happen with COVID. But that was the main thought I had when I saw that actually on many of the different news networks, that the market had done so well in the second quarters. It always took something to make it go so bad in the first. So it's all about managing crises, and this is just another one.
Yeah, I think that it's easy to take those kinds of records where you measure it, by specifically the first 3 months and the second 3 months of the quarter, and just coincidentally the drop happened at the end of March, and then the recovery happened, right afterwards. So there is a little bit of a, convenient timing for a statistic like that. But I'm interested in what you said, because you said that back then in 98, I was still in middle school. I didn't know what the ruble was at that age. But what's remarkable about what you're saying is there was a drop, but it was a little bit of a overreaction and a consequent recovery. Is that how you perceive COVID to be, or is it too early to tell? What are your thoughts on that?
No, the funny thing is everybody looks at the crisis that's at hand initially as the end of the world, because they don't know how it's going to be managed. So the initial reaction to any kind of crisis is raise cash, sell the market. That's just the initial reaction. The other reaction, of course, and the same thing was true here, is buy bonds. Because what do? You sell your stock, you have the cash. Cash does you no good, so you have to invest it and turn around and invest it in something that will at least give you a return. So that is what happens in every crisis, whether it ends up lasting a long time or a short time. What'll always end up happening is they will sell stocks and buy bonds. And the idea of that is kind of where Markowitz noticed this when he formed MPT, is to say, you notice the correlation. That's what people do. They sell stocks and they buy bonds, which means the bond prices go up, interest rates go down as a response to give the economy greater strength, because low interest rates is trying to expand an economy. So what I think on this one, though, is kind of a little bit different than the crises that we've seen before, everything from 87 crash, 98 crash, 2008 crash. There is one thing. Mm-hmm. This will have repercussions in the GDP for many years to come. I'm guessing at least 2 years. There will be repercussions, consequences with GDP. For example,
what does that mean for some of us who are not familiar with
that term? In other words, there's going to be a higher unemployment at the end of all of this. Even after the vaccine is created, we've already seen a lot of companies file for bankruptcy. Bed Bath & Beyond, for example, are shutting down 200 stores in America. Jobs will be lost. You are seeing Starbucks closing down stores. That's been a long time since I've seen Starbucks close down stores. Mm-hmm. And in what they're doing, and what that means is a segment of the economy is going to be gone. And the people that were in those jobs are going to have to transition into things that are done, that are less people face-to-face orientated. So certain retail aspects of our economy are going to shift, and we're going to have, and as they shift, it's going to be in the initially, there's going to be greater unemployment. And what that means in the short run, we probably will see foreclosures, within the next 6 or 7 months. Once a vaccine comes out, you will see foreclosures. And so that'll be a consequence. So real estate prices at some levels are bound to be under pressure, probably towards the end of the year. And in comparing it to other situations that were similar to this, this one here is where it's going to change the quantity demanded by consumers in certain aspects of business. And we're seeing it. We're on a Zoom meeting now doing a recording, and this is the new way of things. And I'm sure everybody would agree. Anybody that watches this Uncast is going to agree that in the intermediate run, for sure, this is a game changer in terms of how business is conducted going forward. And because it's disruptive, look for higher unemployment, look for a shift in how we buy things, how we eat out. And that disruption is going to cause job loss. And job loss generally means less demand. So I think that means for the markets, there's a consequence to the markets as well as a result, right? So
yeah, of course. I'm surprised by you saying, like, even after the vaccine, we'll see more job loss and unemployment. Because are you saying that it's going to be like the ripple effect is going to be long after the vaccine even comes out? What does that mean exactly?
Yeah, because what I meant is after the vaccine comes out, the banks and the mortgage companies that are servicing loans who may have furloughed someone's mortgage, well, they won't furlough it when the vaccine's out.
Right? I see.
And because, hey, there's no reason now not to go back to work. You have a vaccine. Now, The vaccine may not be perfect. Don't expect a perfect vaccine in such a short period of time. But what it does mean is that there's a lot of people out there, bank servicing companies, banks themselves that hold mortgages on their books. They're not going to furlough their mortgage payments any longer, and people are already behind. And if they're already behind, it's going to have an effect on real estate prices, which is the one thing, and if most people look around, that has not gone down at all. Like even stocks, they've recovered most of what they've lost.
Right.
We're flat on the year on the S&P, maybe up marginally now, even though we're in a worldwide pandemic. But the real estate market took nothing, no hit. It actually didn't go down at all. What happened was that there was just fewer sales, right? Because nobody's out to sell. But at the end of the year, when that first parts of the vaccines come out, the furloughs will go away. The job losses are already in the cards. They're baked in the cake. Again, I just mentioned the Bed Bath & Beyond, but there's many other companies. And as a result, the economy is going to have some churning to go. So,
Gotcha. Okay. Yeah, no, I totally understand that. I hadn't thought of that, but that does make sense.
sad, but true.
Yes, absolutely. What I want to do next is real quick. Let's look at some of the iFlip smartfolios that we have on the app, and just let's do an update on how they've been doing.
Let's do that.
So
Good
far.
idea.
Yeah.
Good idea.
So what I need to do though right now is to pause the broadcast and reconnect it, and then we'll be good to go.
Okay.
Give me a second here.
Wait right here.
Yeah.